Good day, everyone. This is Eric Romero with Your Castle Real Estate. I am the Executive Director of Broker Management. Today, we're going to talk about Denver real estate and the market as of the end of the first quarter 2023. So, let's go ahead and start with our first slide here, which gives you a lot of what you need to know in one slide here: average sales price, months of inventory, etc. Now, you can see first quarter of 2023 here in the upper left versus first quarter of 2022. Homes, not condos or townhomes, the average price was down about 3%, condos down about 1%. I would expect that's going to change second quarter just based on the volume of sales we're seeing now and the lack of inventory. A lot of these closings in the first quarter went under contract either early in the year or at the end of last year. So if you buy a house in December, you tend to get a slightly better deal than if you go under contract in, say, May. So we'll keep our eye on that, but you can see the average is down just a tad. Months of inventory, 1 month's worth of inventory, which is very low, but better than it was a year ago when we only had 4/10 of a month of inventory. So in a supply and demand market, still not enough homes, slightly better than last year, but still completely lower than what we need. Under contracts, at the end of first quarter, we had 3,000 homes under contract at that time, 1,400 condos, and you can see the numbers from a year ago, down slightly. So we are seeing slightly less closed transactions this year, I should say, versus same time last year. Number sold, you can see, is down about 20%, 27% in condos. So the number of closings is down. So people ask me, if the number of closings are down, why are prices still up? And that's simply supply and demand. There's just not enough homes. 1 month of inventory. You can see down here at the bottom, 2,400 single family homes, 1,190 condos. And then you look at the fact that there were 3,000 under contract. Homes are still selling essentially as soon as they go on. First weekend or two, if a home's been on the market for 30 days or more, then it's probably overpriced. But most of our homes are still selling within a few days of hitting the market. This is a great chart that just shows average appreciation over the years, going back to the early 70s. On average, about 6% for homes and condos, a little bit more on a little bit more on homes and condos. But you can see it tapers off a little bit here recently, not going up quite as fast. You can see that we had a big increase in prices over the last decade. And then in 2008 was kind of the bottom of the market. That's where we had the recession that caused the average price to drop a little bit. But if you go back 40 years, you can see our prices don't go down often. So if you're a buyer waiting for that drop in price, you might wait a while. It's happened once in the last 50 years, and we had a much steeper recession then than what we have now. Love this chart. This shows what it takes essentially to be in a balanced market or a buyer's market versus a seller's market. You can see if you go back to 2007, 2008, when buyers had a very strong advantage, we had 30 to 35,000 active listings on the market. This dotted line across the bottom shows the number of closings per month. The sawtooth pattern is just seasonality. Wintertime, it slows down. Spring, summer, it picks up. So you can just see we chug along at a fairly predictable pattern as far as the number of homes that sell every month. What changes is what's available. When you get to where we are now, you can see that there is not much of a difference between the number of closed homes and the number of homes on the market. This is a very, very tight seller's market. So, in spite of interest rates, in spite of the number of transactions being down, still just not enough inventory to satisfy demand. So, if you're a buyer who's getting frustrated that you're not getting a deal, that's why. And frankly, maybe the deal is, getting the house. If you look at this chart here, this shows our active inventory per month. I won't spend a lot of time here, but you can see where we were, the dotted purple line in 2019. This is where we are in 2023. So we have more active inventory than we did in 21 and 22, but less than we did in 2020 and 2019. Now let's go to This slide here, and this will be our last slide. This just shows what's the difference between a seller's market and a buyer's market, and what's a balanced market. Typically, a balanced market is you have 4 months to 6 months of inventory on the market. That means the buyer has quite a few choices. Uh, the best homes still sell pretty quickly, but there's no clear advantage between the buyer and the seller when it comes to negotiating. When you get to where you have less than 4 months of inventory, which is where we are now, we're down to 1 month of inventory. Clearly, still the advantage lies with the sellers. So I know buyers don't want to hear that. It's unfortunate for them, but the reality is you have to put your best foot forward as a buyer to buy in this market. Now, if you go back a few years, you can see 2008, 2007, we did have a buyer's market then because we had so many homes on the market, 6, 7 months worth of inventory. And then the balanced markets don't stick around very long. Seems like we're either in a seller's market or we're in a buyer's market most of the time, with these little transition periods in between. So anyway, that's all I have today. Appreciate you watching. Eric Romero with Your Castle Real Estate, signing off. Have a great day.